Hello everybody, welcome back to EduTap. Am I audible, visible, clear to all of you? If the answer is yes, then definitely we can start with our session. Do let me know if I am audible. Yes, so I think everything is going good. So let's start with our session. But before I start, there is one correction. This is not your part 2, this is your part 3. Right? So basically we are now starting with Commerce and Accounts component of your SEBI Grade A exam, wherein we are trying to solve 25 questions per session, and this is your part 3 of Commerce and Accounts, right? So we have already conducted part 1 and part 2, which you can go and see them on the EduTab YouTube channel, right? Now before I start, if you are new to our channel, then please subscribe to it. If you want to get the PDF of this particular class, then please join our Telegram channel. The link is given in the description box below. Right, I can see very less participation today in the session. And it happens because today Saturday is there and multiple people are busy. Not an issue, let's start. Right, so first of all, if you know that we have done 25 questions of commerce and accounts in part 1, 15 questions in part 2. Now we are doing part 3. Today I have a collection of 40 questions, so we will discuss a lot. But at the end of the day, I will be solving 37 questions with you and 3 questions I will give you as a homework. Right, so let's start with the very first question. Rather, I think, right. So, yes, let's start. Yes, I think due to some internet issue, we are not able to uh, like move forward. Right. So looks like I have to close the session right now because or just give me a moment, right? Yes, now I think we will be able to continue. Yes. Apologies. Yes, so let's start. So basically I opened the wrong PPT. I'm very sorry. Now we will solve 40 questions today. So let's start with the very first question. Which of the following is an example of composite ratio? Composite ratio means what, my friend? That particular ratio from which you need data. Like composite ratio is that particular ratio wherein you need data from income statement or from balance sheet or from other different financial statements. Like see what happens in a ratio, there is a numerator and denominator. And if you are getting data of numerator from income statement or balance sheet or vice versa in numerator or denominator, then definitely it's a composite ratio. Now see, current ratio is what? Current assets upon current liability. Now both these figures will be available to you in balance sheet. So this is not a composite ratio. Asset test ratio is your quick assets divided by your current liabilities. Quick assets again is available in your balance sheet. Current liabilities is again available in your balance sheet, right? Debtors turnover ratio के लिए the formula is what? You have your credit sales divided by the average debtors. So sales is not available in the balance sheet. It will be available to you in the income statement, which we also call it as profit and loss account, right? And the denominator over here, which is your total average debtors, that will be available to you in your income in your balance sheet rather, right? So one part of the numerator is coming from income statement, another one is coming from balance sheet. Therefore debtor turnover ratio is a classic example of composite ratio. So your answer will be option number C over here, right? Net profit ratio, again sales divided by net profit. So both these figures will be available to you in the income statement, not in the balance sheet, right? So the correct answer will be over here what? Option number C. Net profit ratio is your net profit by sales, right? So I hope you know. So the correct answer in the first question will be option number C. Second, which of the following is a solvency ratio? Solvency basically tests that how like leverage you are in the terms of debt or in the terms of equity. Is quick ratio a solvency ratio? The answer is no. Quick ratio is basically showing you liquidity, which is not a solvency, right? It might show you short-term kind of, I would say what, short-term kind of liquidity, but not long-term solvency. Yes, debt to equity is a solvency ratio because in debt to equity you have debt, total debt divided by equity. right? So debt to equity will basically show you your total solvency. Therefore, the correct answer will be option number B. Working capital ratio is not again a solvency ratio for long term. It might help you in short term, but not in long term, right? Net profit is a profitability ratio. So the correct answer will be option number B over here. Good. Now, these are the four categories of ratio we have. Liquidity measures your short-term liquidity. Solvency measures your long-term, I would say, solvency position, like whether I have enough money to pay my obligation. So that will solvency ratio will test. Activity ratio will basically test you how quick you are converting into one particular thing to final issue. Profitability ratio will basically check that how profitable your business is, like gross profit, net profit, EPS, P, that all will come under profitability. Next question, come on. So we have one numerical. Calculate quick ratio. Now, first of all, whenever a ratio question is there, write a formula on your left hand side or on your right hand side, whatever the case is. Quick ratio is your quick assets divided by current liability. Quick ratio is what? Your quick assets divided by your current liability. Now, quick assets is equals to current assets minus your inventories and prepaid expenses, right? So they have given you current assets, current liabilities, inventories, prepaid expenses, land, building, share capital and goodwill. See, you can directly eliminate land, building, share capital and goodwill because this will never help you in your quick ratio, right? You only need quick assets divided by your current liabilities. So if you see, your quick assets will be current asset, which in this case is 4 lakh, minus 25,000 of inventories, minus 25,000 of prepaid expenses. So your quick assets will be 4 lakh minus 50,000, which will be 3.5 lakhs, or you can say 3 lakh 50,000 also. And your current liabilities is directly given to you as 2 lakhs. So divide 3.5 by 2 and your answer will be somewhere around option number B, I think, right? 1.75 is to 1. And if you do the calculation, you will get the same figure. How this 3,50,000 came? Quick assets is equals to your current assets minus your inventories minus your prepaid expenses, right? Divided by current liability. Now this is a kind of a moderate level question, not tough. So the correct answer over here will be option number B itself. Now question number 4, my friends. I can see someone in the chat. Rishi is participating. Question number 4. Calculate gross profit ratio from the following figures. Now, gross profit ratio is gross profit divided by sales, right? So, you have to first calculate gross profit because gross profit is not directly given to you. Sales is directly given to you. So, your denominator will be 5 lakh. But for calculating the gross profit ratio, you first need to find gross profit. Now, gross profit is what? Gross profit is your sales minus COGS or sales minus cost. Now, sales is directly given to you as 5 lakh. Cost, COGS, again you have to apply a formula. Opening stock plus purchases plus direct expenses minus closing stock. This is what the formula of closing, this is what the formula of COGS is, right? So your closing stock, opening stock and purchases will be used for calculating COGS. So try to do the like mathematical equation. 3,50,000 plus 70,000 minus 35 will be what? This will be your COGS figures, and whatever COGS figure will come, that you have to deduct from sales and then you will get your gross profit. So if we check, let me do the calculation also so that we all are connected and we are all able to solve the question. So first, my friend, you have to calculate gross profit, but to calculate gross profit you need COGS. So therefore the overall formula of COGS is what? Opening stock plus purchases 3,50,000, which will be 420 minus 35,000, which will give you 385. So my COGS is coming as 3,85,000. You can also use calculator because SEBI allows calculator, but use it to the minimal extent, very minimal. If you are good in mathematics, then avoid it. And I will deduct this particular 385 from my 5 lakh. So it will be somewhere around 1,15,000, right? So now you have got your gross profit. Gross profit kaise aaya? Simply 5 lakh minus your COGS, which is 385. So your overall, I would say, gross profit will be 1,15,000. 1,15,000 divided by 5 lakh again, because you are calculating your, I would say, what gross profit ratio. So in my case, the answer is coming out as 23%. So you just have to do 1,15,000 divided by 5 lakh. Very easy question, nothing tough to explain. This is your answer number C, and I have solved it in front of you. Now, if you want to look at the explanation, over here we have the explanation. You can directly see over here, my friends, that we have not done any kind of very hypothetical science. Very basic, gross divided by sales, but to calculate gross profit you have to apply the formula of COGS. So if you do this, your answer will come out as 23%. Next question is on my screen, try to solve it. Next question is on my screen, try to solve it. Yes, very good, Rishi. From the following information given below, you are required to calculate operating profit. Now, operating profit is basically your EBIT, earning before interest and taxes. Now, to calculate EBIT, first you need gross profit. Have they given you gross profit? No, you have to find it, right? Now, see, gross sales, sale return is given. So, sales return, we have to minus it because we have to take net sales, right? So, I have done a sale of 6,50,000, but out of that, 50,000 has been returned. So net sale is 6 lakh only. So my net sales will be 6 lakh, right? My net sale will be 6 lakh divided or not divided, because this is my overall, I would say, what sales. This is my sales minus my 4 lakh 5,000, because your COGS this time is directly given to you. So if you do this, your gross profit will somewhere be around what? 6 lakh minus 4 lakh 5,000. 6 lakh minus 4 lakh 5,000. So your answer will come out as what? It will come out as 1 lakh 95. So my gross profit is coming as 1 lakh 95,000. I'm very sorry for my bad handwriting, but this is how it goes. Now from gross profit you have to deduct multiple, I would say, operating expenses. In this case there are two operating expenses which I will deduct, 50,000 and 40,000. So 1 lakh 90,000 minus 50,000 minus 40,000. And if you are wondering that why we are doing the subtraction part, because from gross profit, if you have to come to your EBIT, you have to reduce your operating expenses. So in my case, I am getting my operating profit as what? 1 lakh 5,000. So now I have what? Now I have my EBIT divided by sales. Sales in this case was 6 lakh. So let's test that whether we are getting the answer or not. So I'm getting it as 17.5. Is it the correct answer from your end? Yes, answer I think is option number A only. So what we have done, we have calculated our gross profit first, then deduct the expenses from it, operating expenses. So my total operating income was coming as 1 lakh 5,000. 1 lakh 5,000 I have 1 lakh 5,000 I have divided by 6 lakh, because your operating profit ratio is operating profit divided by sales. In sales, this case is 6 lakh. So 1 lakh 5,000 divided by 6 lakh will give you answer as option number A. Now this is your phase 2 level question. If you are practicing, then practice at a very good scale. This is what the explanation is, but we have done it, so we are not focused on explanation anymore. Question number 6, my friend. Calculate dividend yield ratio. Calculate dividend yield ratio. Let me see in the chat how many of you have given the right answer. Yes, very good, Rishi. Now we have next question, which is question number 6. Calculate dividend yield ratio. So for dividend yield ratio, you need EPS, right? You need EPS. And if you see, net profit after taxes 48,000. Oh, sorry, not 48,000, 4,80,000 divided by the number of equity shares will give you EPS. So your EPS will be what? 12. Your EPS will be 12 if I'm not wrong. Yes, 480 divided by 40. And then you have your market value also. So it will be 12 divided by 60 into 100. So it will be 20, right? It will be 20. Why? Simple, right? So 12 by 60 will give you 20% only. Dividend yield basically tell you that how much dividend you can expect, right? So earning per share divided by market value per share. So market value was directly given to you as 60. And you have calculated EPS. EPS is what? Net profit minus preference dividend divided by your number of equity shares outstanding. So in this case, number of equity shares was 40,000. Net profit after tax is 480, and they have not given you any preference dividend also. So 480 minus 0 divided by 40,000, you will get your EPS as rupees 12. It basically shows that your earning per share is 12. Higher the better for most of the investors. Now this 12 will be divided by 60, because your market value in this case is 60. So dividend yield is EPS by market price into 100. So my answer was coming out as option number B. Good. Question number 7 now. From the following information, calculate debtors turnover ratio. Now this is again a phase 2 level question, so try to solve it. Debtors turnover ratio is your credit sales divided by your average debtors. Average debtor is like opening plus closing divided by 2. So now first I need to calculate my credit sales. Credit sales के लिए they have given me total sales, cash sales, sales return from credit sales. So if I do total sales में से cash sale minus, if I deduct cash sales from the total sales, I will have my credit sales which will be 80,000, right? But they have also given me net sales return, so I have to take net credit sales. So my net credit sales will be 75,000. Very easy. This is 75,000, right? So my numerator is 75. Total sales minus cash sale is 80. 80 minus 5 is your, I would say, 75. So you have 75,000 as your numerator. Now you have to calculate your denominator. Denominator will be what? Opening debtors plus closing debtors divided by 2, which will be 12,500. So your numerator is 75,000 divided by 12,500, and I am doing this on my calci also, so answer will come out as 6. Answer will come out as 6. So correct answer over here is option number B. I hope you are also solving. In the denominator we have to take average debtors. This is like ratios chapter. You should know ratios, right? Now average debtors is 10 plus 15, 25 by 2 is 12,500. So 12,500 will go into the denominator. So your answer once you solve this fraction, 75,000 by 12,500 will be 6. Okay. So seventh answer is option number B. Next question. Which of the following is not a liquidity ratio? Which of the following is not a liquidity ratio? Current ratio is, it tells you about short-term liquidity. Current ratio formula is current assets divided by current liabilities. Quick assets upon quick assets divided by your current liabilities quick ratio. Cash ratio is cash plus cash and equivalents divided by current liability. Debt to equity ratio is not a liquidity, it's a solvency ratio. So answer will be option number D. Asset test ratio is the another name of quick ratio only, right? So the correct answer over here will be option number D. Very good. Now let's move to question number 9. Again a numerical. So we are taking some numericals because in commerce and accounts you can expect some numericals. From the following information, calculate PE ratio, price to earning ratio. So you will calculate this as what? Market price divided by the EPS. Market price divided by EPS. Market price is directly given to you as 12.5, so we don't have to budge about that. But again, EPS you have to calculate. EPS के लिए profit available for equity shareholder is given to us as what? Profit given to us as an equity shareholder is what? 1,75,000, right? Now this we have to divide by 70,000 because 70,000 is the number of shares. We don't have to take the value of shares. It's the number of shares, right? So 75,000 divided by 70 will give me 2.5. So my total P ratio will be 12.5 divided by 2.5. If you do 12.5 divided by 2.5, your answer will come out as option number C, which is 5. Right? So answer will be option number C. I hope you are able to solve this. Yes, very good, Rishi. Now we are moving ahead to the next question, question number 10. Debt to equity ratio of a company is 0.5 to 1. So over here, debt is given as the numerator and equity is your denominator. Which of the following will decrease? Which of the following will decrease debt to equity? So if a fraction has to be decreased, either you decrease the numerator or either you increase the denominator. This is what happens, right? If a fraction is there, x is to y. If I have to increase this fraction, I will increase the numerator or either I will decrease the numerator. In both the cases, the fraction value will increase. Now, if you have a debt to equity ratio is given, which of the following will decrease? So you have to see all the options and then mark it. Issue of equity shares. Issue of equity shares. Right? Cash received from debtors. Now, if you see, my friends, if I see the overall fraction value of debt to equity is what? Debt upon equity. Right? This is what the fraction is of debt to equity. Now, if I issue equity shares, that basically means that I am increasing my equity part. If I issue equity shares, that basically means I am increasing my equity, right? So that will lead to the fall of debt to equity ratio. So answer will be option number A itself. Although it was very, very easy and you could have directly solved it, right? If your numerator increases, then the value of fraction increases. If your denominator increases, the value of fraction will fall. So equity is increasing over here in the first transaction, that will lead to the fall of debt to equity. Therefore, your answer will be option number A, right? And in this, cash receipt to debtors will not affect like anything, because over here your asset side is getting impacted. Issue of debentures. If you issue debentures, then your debt will increase. Once your debt increases, that definitely increases the value of fraction. Purchase of goods on credit, this will not impact your, I would say, long-term debt. Only short-term debt will be affected. So therefore, answer will be option number A over here. Question number 11 now. Question number 11. Which of the following represents the correct formula of cash ratio? Cash ratio is your total cash and cash equivalents divided by your current liability. Very basic question. Yes, so answer over here will be option number A itself, because cash and marketable securities is your cash and cash equivalents only. Cash and cash equivalents are basically substitute of cash. Like demand deposit is a substitute of cash, right? So my answer over here will be option number A. Cool. Question number 11 done. Now we are moving to question number 12. Which of the following is the correct formula for capital gearing ratio? Capital gearing ratio basically means what? That particular ratio which tells you the relationship between interest bearing capital or fixed dividend bearing capital divided by your equity shareholder. So equity share capital will come in denominator, not numerator. So A is incorrect. Preference share capital divided by equity share capital, it can be correct. Total liabilities, no. Equity share capital plus reserves, total debt, no. Fixed interest bearing funds divided by equity share funds is the correct answer. So 12 E will be correct. Now in fixed interest bearing fund, we are including debt also, which is a non-current liability, plus your preference capital also, because in preference capital you have to pay a dividend which is fixed irrespective like what amount of profits you have. Even if you have less profit, you have to give dividend to the preference shareholder. So the correct answer will be E. Very good. Now we are moving ahead to question number 13. Which of the following correctly represents the formula of proprietary ratio? Proprietary ratio is the owner's ratio, right? So we will check about shareholders fund in relation to the total assets over here, right? Total assets divided by equity share capital, current asset by shareholder fund, this is incorrect. Shareholder fund by total assets or long-term debt, no, long-term debt is not there. Fixed asset is also not there. So either your answer will be A or C. No, proprietary ratio is in the term of shareholder funds and total assets. Therefore, the correct answer will be option number C. Right? Proprietary ratio basically means that out of total funds which I have, how much are in the relation with the total assets? Or you can say how much my total assets are covered by my shareholder funds. So the correct answer will be option number C over here. Right? This was again a good question because I can see many of you have not answered it correctly. Question number 15. Which of the following correctly represents the formula of interest coverage ratio? Interest you pay from your EBIT, right? From the profit which is left. So interest coverage ratio is not measured on sales. It is measured on the EBIT. So basically it shows that how much interest obligation has to be paid from the EBIT which is left in your business. So is it net profit divided by interest expenses, EBIT by interest, EBITDA by total debt, operating profit divided by interest income, or PBT divided by finance cost? Yes, the correct will be option number B, which is EBIT divided by the interest expenses. Next, moving forward to the next question, which is your question number 15. Question number 15. So let's see, Rishi is saying, Raghav is also answering, Viral Trends is also answering. Good. What is the generally accepted current ratio for a healthy business? Current ratio is what? Current assets divided by my current liability. So this ratio is considered as 2:1, which is good. So my answer will be option number C. So for every current liability, if I have 2 units of current assets backing to it, then definitely my business is safe. So answer over here will be 2:1. Very good, those who are saying C. Now we are moving ahead to question number 16. So ratio is finished up. Now we are moving ahead to different I would say other chapters. The amount of money received by the company on the issue of shares of multiple installment is ultimately credited to what? So if you see the journal entries for your share applications, share allotment, share call, share second call, it will ultimately lead to creation of your share capital account. So answer over here will be option number A, credited to share capital. Even if you receive money on the application stage, you do what? bank account debit to share application. Then later on you transfer the money in share application to share capital. So it will be share application account debit to share capital. Same goes on allotment. First you make allotment due, right? Share allotment account debit to share capital, right? And then you collect the money on allotment, which is bank to share allotment. So the correct answer over here will be option number 16A. Remember, share capital account is credited and which particular account will be debited? Bank, because the entire money will go in your bank account only. So ultimately one account is getting debited and ultimately second account is getting credited. Bank debit to share capital is what the situation will be once you complete all the different entries related to share capital. Question number 17. When a company issues shares at premium, the premium amount is shown credited to a separate account which we call it as security premiums account. And this particular account is shown under what? This account is basically shown under your equities and liabilities, reserves and surplus, right? So asset, no. Equity and liabilities, company balance sheet under reserves and surplus, yes. Non-current liability, no. Title of assets, no. So my answer will be option number B itself. Okay, 17, the answer will be B. Securities premium account or your retained earnings account, capital redemption account, capital redemption reserve rather, journal reserve. You have multiple other reserves, right? So that will be shown in the reserves and surplus. Therefore, your answer will be B. Question number 18 now. A company purchased a machine of 380 and purchase as per the purchase agreement, rupees 20,000 was paid in cash. So your total net balance for issue of shares of 100 each. Okay, so the total machine cost is 380, out of which 20,000 you have paid in cash. So you are left with what? 360, 3,60,000, right? Now see, you have issued the share on premium and face value is 10. Face value is very important because we calculate premium and discounts on face value only. So if you see, you have 3,60,000 total value to be issued. This is the total number of, I would say, value, right? Now the question is asking you how many amount has to be credited. What amount has to be credited to the security premium? So for that you have to calculate number of shares. So 3,60,000 divided by 120. Why 120? 100 face value, 20 of premium. So if you do this, this will give you 3,000, right, as a number of shares. Now on per share you are collecting 20 rupees as a premium. So your total value will be what? 6,000 or 60,000 rather, which you will be crediting to the securities premium account. So your answer will be option number B. Okay, cool. So this is your journal entries, machine account debit because machine is coming into your business. Asset increase is always debited. To bank, to machine which you have bought, right? And you are issuing 3,000 shares for which you will be having a premium of rupees 60,000 because 220 is a premium which you are collecting on each share. When a company forfeits shares, the forfeiture account is debited, credited, or what? When a company creates a forfeiture, the amount is credited in the forfeiture account and share capital accounts is debited. Share capital account is debited by the called amount, right? And share forfeiture account is credited with the paid amount. So my answer will be option number A in this particular case, not B. शेयर फोर फीचर में हम वो वाला बैलेंस डालते हैं जो अभी तक हमें मिल चुका है, right? So we will enter the entry, we will make an entry with the paid amount. Total called amount is basically your share capital that will be debited. So जितना कॉल किया उसे कैंसिल करेंगे और जितना हमारे पास पेड है उसे शेयर फोर फीचर में ट्रांसफर करेंगे एंड देन यस वट एवर इज ड्यू योर नेक्स्ट इंस्टॉलमेंट विल कम लाइक 2 शेयर अलॉटमेंट, 2 कॉल इन रिजर्व्स एंड सरप्लस, 2 कॉल इन अरियर्स, वट एवर द केस इज दैट विल बी फॉलोड. Now moving forward to the next question, question number 16 in this case. A company forfeits 200 shares at 10 each. A company forfeits 200 shares at 10 each, on which 600 has been received and reissue of shares of 1800 as fully paid. So a company is forfeiting 200 shares at 10 each, out of which 600 has been received. Now this 600 has been received, right? So this is basically the amount which you will transfer in share forfeiture because this is the paid amount. Now company is issuing this particular shares at 1800. This basically means the share of 2000 is issued at 1800. So I'm charging this 200 as a discount. I'm charging this 2000 as a discount. Now this discount will be charged to share forfeiture only. Please remember, as per the regulations, the total discount which you can give on the reissue cannot exceed the balance which is there in the share forfeiture. So in this case, the maximum discount which we can give is 600. But is company giving 600? No, company is just giving 200 as a discount. So my balance is left, which is of 400. This balance will be added to the capital reserve account because the unused balance of share forfeiture is transferred to capital reserve. So my answer will be option number B in this case. Yes, security premium amount, if it is paid, or if it is received by the company, then it is not paid. That is a very good observation by Rishi. Question number 17. Which of the following statement is not true? So you have to identify which of the following statement is false. Preference shareholders are given more priority over equity shareholder when it comes to dividend. Yes, this is what is mentioned in section 43 of the Companies Act. Preference shares do not have voting rights. They do not have, yes, this statement is correct because they are just a passive owner. The rate of preference fluctuates. No, no, no. The rate of preference remains fixed. So my answer will be option number C because C is incorrect. C is incorrect. Preference shareholder do not have voting right. This statement is good to go. This statement is correct because they don't have voting rights. They are just there for passive shareholding, right? But the rate of preference dividend does not fluctuate. It remains the fixed. So my answer will be C. Right, question number 18 now. Which of the following is correctly matched? Section 62 right, section 63 bonus, section 68, 69, 70 is associated with buyback. According to me, all the three sections are right. So answer will be option number D. Now these questions should be addressed very quickly in front of you because you should be aware of section 62, 63, 68 also. 43 also, section 39 also is important for Companies Act, right? So I hope you are able to revise multiple of the sections. Section 39 is the amount collected on application, 0.5% of the total, 5% of the total face value you can receive, right? Then you have section 39, section 43 is also important. Section 62, 63, 68 are directly related to your syllabus. Right. Question number 19. Buyback of shares. Buyback is as per section 68, 69 and 70. Buyback of shares cannot be made from the proceeds of the earlier issue of the same kinds of shares, free reserves, security premiums, both B and C or none of the above. See, buyback can be made from free reserves and security premium reserve, but buyback cannot be made from the same kind of shares. For example, 10 years back, I have issued preference shares. The proceeds which I have collected from preference shares can be used to buy back some other kind of share or some different kind of share. Like I can buy back equity shares from the proceeds which I have collected from preference shares. For example, 5 years back, I have issued equity shares. Now the proceed which I have collected from the equity shares, this can be used to buy back other different class, not equity shares. So over here same nahi hona chahiye, it should be different. So answer will be option number A itself. Yes, the answer will be option number A. Cool, so this we have discussed. Now moving to question number 20. From the following, which of the following is correct? Capital redemption reserve is created out of profit of the company. Capital redemption reserve may be applied by the company in paying unissued shares to the company. The purpose of capital redemption reserve, this is your CRR, is capital redemption reserve, is to make sure that company has a capital base intact in the case of capital demutation. Yes, all these three statements are correct because these are the journal features of your capital redemption reserve. So the correct answer will be option number D. Right, all of these are correct, so answer will be option number D. Very basic stuff. This is what the basic objective of capital redemption reserve is. Like even if I have done certain redemption of the capital, I should have enough balance in my capital redemption reserve. This basically ensures that your business is safe. So come on, we have done the half of the questions, 20 more questions to go. Let's move ahead to question number 21. A very basic question, which is like the foundational question of balance sheet. If total assets is 36,000, liabilities are 16,000, what is the amount of equity? Total assets, like I hope you know, assets is equals to what? Assets is equals to your liabilities plus capital, right? Assets is given to you as 36,000, liabilities are given to you as 16,000, and capital you have to identify. So 16 minus 36, which will be 20. So my answer will be option number A. Right? 36 minus 16 will give you capital is 20,000. Cool, very easy. If this is a phase 1 level question, not phase 2 by the way. Come on, next question. Rent expenses were charged to the books of account for 11 months, but it was not charged in the 12th month. So you have done the accounting only for 12 months and you have forgot to enter a transaction for 12th month. This is basically which particular kind of omission? Is it a clerical error? Is it a principal omission, or there is no error? Yes, if you know, as per principle of omission, if you skipped something, that will be counted as option number B, which is error of omission. Now, error of omission can be of two types. It can be error of full omission and it can be error of partial omission also. In this case, you have completely forgot. So my answer will be option number B, which is error of omission. By the way, this is a previous year question of SEBI or of PFRDA, right? Question number 21. Provision of tax is under which subhead in balance sheet? So if you are creating a provision to be paid for tax, this will be shown in long-term provision. No, horrible. Short-term assets, no, it's a provision, so you have to pay. So it cannot be your liability. It cannot be your asset. It has to be your liability. Long-term liabilities, no. Long-term liabilities is non-current liabilities. Short-term provisions, yes. So my correct answer will be option number D. Yes, the correct answer will be option number D in the question number 21. Moving forward, my friends, let's move forward. Question number 22. Now, what is the total cost of machine? They have given you the original purchase price 15 lakh. Cartage is given to you as 2000. Freight is given to you as 25,000. Installation and testing charges are 40,000 and 18,000 respectively. So, as per the cost principle, you will record the machine at what particular price? 15 lakh, or will you add certain expenditure? Yes, what happens is, as per the cost principle, I have to include all the expenses related to that particular machine in the overall cost itself. So it will be 15 lakh plus 2000 plus 25,000. So this is 27 plus 40,000 plus 18. So if you do this mathematics, 15 plus 2 plus 25 plus 40 plus 18 will give you the answer as 15 lakh 85,000, right? So my correct answer will be option number C. Very good, Rishi. Now moving to question number 23. When the company dissolves, which of the following debenture holders have the right to receive? Debenture holders are basically the people who have given you debt, right? This is borrowing, and on every borrowing you return dividend? No, right? Dividend is return on the shares. On every borrowing you return the principal and interest. So the classic example over here is option number A, right? So you will return what? You will return what? Question number 23, right? They are in serial 22, 21, 20. Right, I think there is some, I would say, error, but not an issue. We are just solving the questions. 22, right, but not an issue. Don't worry, you have many questions to solve. Yes, the correct answer will be what? Option number A over here. Cool. Now let's move to 24. Profit on forfeiture of share will be reissued. After reissue will be transferred to what? Profit on the forfeiture shares is after reissue is transferred to what? So if you have any profit on the forfeiture of shares, it after reissue, it will be transferred to what? So if you have any profit on the forfeiture of shares, that will be transferred to the capital reserve. This is what we have just now discussed on the previous slide as well. Any amount which is left on the share forfeiture account, that will be transferred to the, I would say, what, capital reserve, right? And remember, there is a difference between capital reserve and reserve capital. Capital reserve is a reserve. Reserve capital is basically the capital which you have not called. You will only call this particular capital at the time of liquidation. So capital reserve is different and your reserve capital is different. Don't get confused. Question number 25. Which of the following is not a component of cash flow from operations? Cash flow from operation basically means those particular activities which are directly traced to the main operating business of your, I would say, main operating activity of your business. Settling of trade payable, yes, this is very basic, right? It will be done in the normal course of business. Collection from debtors, yes, it will be there again in the normal day-to-day activities of business. Payment to a supplier of machine. Like this is not a regular activity. You will purchase machine, and it is not like every now and then I'm purchasing machine. So payment to a supplier of machine will not be categorized as your operating. Rather, it will definitely be counted under a different activity itself, right? So my answer will be option number D in this particular case, right? Now let's move forward to the next question, which is question number 26. Question number 26. A company has an outstanding preference shares of 15, I would say what lakh, out of which 9 lakh will be redeemed using receivable profits, and for the rest, equity shares will be issued having a face value of 8. Calculate the number of equity shares. So the total obligation is 15 lakh. This you have to pay, right? Out of which 9 lakh will be redeemed using receivable profits. So now what the question is saying, that you have 15 lakh of total amount to pay, and from this 15 lakh, 9 lakh you will be using from your receivable profits. So the leftover amount is 6 lakh, right? And the question is asking you how many equity shares will you issue when the face value is 8. So 6 lakh divided by 8, if I'm not wrong, 6 by 8 will give you answer as option number B, 75,000. Option number B, 75, right? 6 lakh divided by 8, simple. And again, this is PFRD Grade A Phase 2 level question. So this certain times easy questions can be asked in your Phase 2. Question number 27, my friends. Question number 27. A company has purchased 50,000 units at rupees 2 per unit. Market price of the unit as on 31st March 2021 is 0.90 per unit. Now calculate the closing stock of the company. Now closing stock, whenever you are talking about the inventory's closing value, as per AS2, right? Inventory valuations, you will always value your inventory at a less of cost or at the less of net realizable value. Whatever is lower end of cost or a net realizable value will be used. So if you see, I will be using 2 or 0.90, I will be using 0.90 because this is lower than the cost and net realizable value, right? Now if you see, 50,000 into 0.90 will give me answer as 45,000. Therefore the answer will be option number B. Yes, the correct answer will be option number B. Question number 28. Payment of dividend by a company will be classified as which of the activities under cash flow? So if you are paying dividend and dividend is paid on shares, so shares is not an operating, it's not an investing, it's not it's a financing activity, right? Yes, lower of cost and NRV. So if you see, it's not an operating activity, not investing, so my answer will be option number C. Payment of dividend by a company will be a financing activity under the cash flow prepared as per accounting standard 3 and Indian accounting standard is 7. Remember it, right? So the answer will be option number C. Question number 29. As per accounting standard 10, property, plant and equipment, depreciable amount of an asset should be allocated dash over its useful life. Ad hoc, irregular, systematic, random, or none of the above. Now see, this is again a previous year question if I'm not wrong. The correct answer will be option number C, which is systematic over the useful life. Systematic means what? That you are charging depreciation every year, not randomly, right? Question number 30 now. Question number 30 is dash are the investments which their nature are readily realizable and are intended to be used for less than a year from the date when such investment is done. Current assets, non-current investments rather, recurring investments, immediate investments. What will be your answer? Question number 30. If you are realizing something in less than 1 year, then definitely that answer will be option number A, current investments. So my answer will be option number A in this particular case. Let's move. This was easy one. Now we have a question related to buyback. Maximum buyback permitted through a financial year through board approval route is what? Now see, total buyback you can do is 25%. Maximum buyback, right? 25% of your paid up and your reserves and surplus, right? But out of this 25, 10 can directly be approved by board, and next 25, like 10 to 25, has to be approved through a special resolution in your journal meeting. So therefore, in this case, they are asking you board approval route, right? So board approval route will be what? 10% only. So your answer will be option number B. Very good. Maximum limit for buyback from shareholder special resolution. So say if special resolution is taken, then it will be 25%. Then it will be 25. I have just now explained this to you. If it's 10%, then board approval route. If it's 10 to 25%, 10 to 25% will be a special resolution taken by your shareholders. Now coming to question number 33. Who has the right to renounce? Renounce means what? That company is giving you right issue, but you have renounced it. You are selling your rights in the open market. So who has the right to renounce the right shares? Only promoters, only directors, all shareholders, only institutional investors, or only resident investors? Yes, the correct answer will be option number C. All shareholders can do it. Right? All shareholders can do it. Right? Question number 34. Come right price refers to the price of the share. If you see come is basically used for before and X is used for after. Right? So very easy question, theoretical question. This can appear in your phase 1. Come right price refers to the price of a share after the issue. No. After the issue is your X price. It's your X price. Before, yes, before is the correct answer. Therefore, your right answer will be option number B itself. Now moving forward, and difference between come and x is known as the value of right. Remember it. A difference between come and x is basically known as what? Value of right. Bonus shares, once they are allocated by the company, can be withdrawn before the record date, only after the shareholder approval, with SEBI permission, or cannot be withdrawn or only after NCLT approval. So if bonus issue has happened, then they can be withdrawn by which particular method? They cannot be withdrawn at all costs. SEBI regulations had made it very clear. If you have approved if you have gone with the bonus issue, then you cannot withdraw it. Right? Do remember. Question number 36. What generally happens to a company market price after bonus issue? So if you see after bonus issue, rights issue and whatnot, multiple corporate actions, so you should remember that what will be their after effect. So what generally happens when a company's market price per share immediately after bonus issue? So company's market price immediately after bonus issue reduces, although market cap remains the same. Your market capitalization remains the same. So answer over here will again be option number B. Right? 35 B, not D. It becomes fluctuates randomly. No. Right. Now let's move to question number 37. As per SEBI's latest circular effective for bonus issue 1st October 2024, the issuing company must apply for in principle approval for bonus issue within how many days? 2 working days, 3 working days, 5 working days, 7 working days, or 10 working days. Now this is factual. If you know the answer, then you know it. Otherwise, you have to ignore it. The correct answer will be 5 working days. Remember, approval has to be taken in principle in 5 working days. Allotment will happen on T plus 1 and your share trading of bonus shares will happen on T plus 2. T is over here record date, right? So once you get the shares, T plus 1 pay allotment, T plus 2 pay you will do your trading, right? So the correct answer here will be option number C. Now I'm giving you 3 questions for homework. Question number 38, question number 39 and question number 40, right? But we will solve these questions in the class. For those who are doing homework, my duty is there to give you the answers, right? A script issue. A script issue is basically that particular issue which is done for bonus, right? So bonus issues are like free. So look for the option. Issue of shares to an employee under ESOP? No. Issue of shares under cash? No. Issue of shares to the existing shareholders without payment? Yes. So my answer will be option number C in this particular case. So we are solving your homework also. Question number 39. Which of the following is not a possible scenario for a shareholder in a right issue? Accepting the right offer and paying the shares? Yes, this is the most good one because this will not lead to dilution of shareholding. Selling of rights to someone else if articles of association permit? Yes, this is what your renunciation of right is. Doing nothing? Yes, you can also opt for doing nothing. Converting rights into preference? No, 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 no. You cannot convert your right shares into preference. So answer will be option number D. Right? Renouncing rights in favor of other. This we have seen. This is your basically renunciation of right itself. So in the previous question, the right answer was option number B. The maximum period for which right offers must remain open is what? The maximum period for which right offer must remain open is what? So you have to let me know the answer of this particular question in the comment box. So I'm giving you just one answer as a homework. I hope you will be able to do it. So thank you very much. I hope I was able to NCLT in the case of what is this particular doubt? Can you please expand it? Can you please expand it? NCLT. Cool. So if you can rewrite your doubt, we can discuss about it. Otherwise, let's close the session. And today, finally, we have completed our commerce and account, all the three parts. From Monday onwards, you will see costing classes, which will be happening under this particular series. Cool. So that's it, my friend. Have a great time ahead. If there are any doubts, then I'm waiting for 5 seconds. Then we can discuss it. Yes, 15 to 30 is the right answer for your